For the numbers on the way, let's talk some more macro in the trading session that right now is faded from an early pop a little bit. Alan Nuckman's down at the SIBO. Alan, I know you got a trade for us, but let's talk S&Ps first because you're still looking at a VIX. It's right below 40.
Yes, but I hear the horses. The white knights are coming. The Fed's going to come riding into town to save the day.
Oh, boy.
There's a 100% chance of a cut in that March meeting. 100%. And it looks like it's going to be a half a basis point cut. So we've talked about this before. They are going to do anything and everything they can to support the stock market. So don't think that that's not going to happen. Now, what we've seen here is the risk reward is recalibrated. It's back on the bull side. The market in the S&P has come back down. We melted our melt up, and now we're back down to the trading range where we traded between 2,800 and 3,000. If you remember, that was from March until October of 2019. So now we're back in that range. 2,800 is a key level of support. Let's see if that holds. But I think things have unwound very quickly, so I think there's some opportunities with all of those gaps up above.
Okay, Alan, let's talk Fed for a sec, all right? I know you watch the levels. I know you watch the technicals. Do you want to debate the Fed a little bit? I mean, should this be the panacea that it has been in the past? If Jay Powell says I'm going to cut, is that the cue to buy?
Well, what'd you see on Friday? Friday, that last 15 minutes of the market, we saw a 100-point turnaround in the S&P.
You think that was Powell?
That they were going to do what they were. That was completely Powell. He came out and released a note that said the Fed's going to do what they need to do. In essence, the pressure's on. He has to cut rates, and they're going to do that. So let's remember the policy and the politicians behind this. And so the market can snap back. We'll have to wait and see. But if you're looking at price, like I said, that's what I focus on. Tech is still up 20% in the last 52 weeks, even with this unkind unwind. So I think there are a lot of opportunities to the upside still.
The unkind unwind, I like it, Alan. Hey, last point here for Jay Powell, though. When he says that he's going to act and use the tools, in the past we know what that's meant. But do we know what's going to cue him to do it? There's nothing in their playbook about viruses, Alan. Does that mean he's going to wait around to see the data roll over?
I'll tell him what's going to cue him. I'm going to tell him what's cue him when his phone rings. When his cell phone rings, he will do it. There's no questions about this. Let's not pretend that this is not the game anymore. It is the way it is. As a trader, this is these are some great opportunities. Obviously, we've had many months of upside. Now things have, like I said, recalibrated. Let's look and see where these opportunities are. But as a trader, we want the markets to move. And let me ask you a quick history quiz here. When was the last time the VIX up here at the level that we got to? We got to 49.50 on Friday. When did we make that $50 high, and what caused it? The market sold off 12% at that time.
Sounds like a financial crisis to me, the GFC, Mr. Nuckman.
No, not even close.
What was it?
2018, February 2018, when the 10-year note yield went to 3%. Look at the panic that ensued there and how quickly that changed and the markets came back. So markets focus on earnings, and we've already readjusted the earnings to zero growth for 2020. So what does that mean for stocks? Their EPS ratio, the earnings per share has come down to the S&P is now at the 18 level. We were at 22. So from a value standpoint, things have gotten cheap once again.
Yeah. All right. Now hold on a second, Alan. 18. VIX 18.
18, that's only 2 years ago.
The big the Volsplosion, we've already moved past that on VIX. We're way above this thing.
No. That was a $50 high. That was a $50 high in 2018. We got to 49 and change on Friday. Didn't take that out. And actually, if you go back to the December of 2019, when we had the markets going down because of the trade war, the high in the VIX was only 35. So again, it's pretty interesting to see that we were more worried about the 10-year note yield getting to 3% than we are about coronavirus.
All right. So you're going intraday on me. I thought you were a weekly chart guy, Alan. Hey, let's talk some tech, all right? Because you're trading HPQ today. What do you like? You like the specific story with Xerox and then rebuffing it? Or do you like the fact that it's just tech overall for a bounce back, or what?
For me, it's about strategy. And last week we talked about Micron, okay? And the strategy, an in-the-money option with plenty of time after a pullback. That, even with the sell-off that we had last week, that Micron option is at break-even. Let's look at HPQ. HPQ lost 13% in 4 sessions. It's been trading between 16 and 24, so there's a super support level at that halfway point at 20. So looking at the $18 call for April's trading about $3.50, and it's $3 in the money. So you're buying the in the money option, you're tying up a lot less money, and you're going to get a big payoff if and when that stock appreciates. There's some big gaps up above. There's a gap at 2150 and there's a gap at 2250. So when these markets reverse, and they will at some time, when they reverse, you're going to get that short squeeze and you're going to see these markets shoot higher. This stock is actually unchanged in 2020, even after this big drop from the top.
Yeah. All right. So you like HPQ up 90 bips today. And, look, I guess in a market that has gotten, 20, 30% declines and stuff in the consumer space, HPQ just a couple bucks below where it was, at the start of the year.
Yeah, the PE ratio is 9. Okay. So, if you want to look cheap, that's cheap.
All right. So you're going a little bit different because a lot of times you tell us, Alan, you want to go and you find the names that have been just killed the most. This is the opposite. This is one that's shown strength.
Right. Overall, it's shown some strength, but it's a pullback in a momentum market. And from a trading standpoint, if this stock stays the same, my break even on this is only 50 cents higher. So I only have 50 cents of time value that I can, that's only going to erode against me in the next 45 days. I've got a delta of 80-some%. So what that means, a modest move in the stock, a $2 move in the stock, you could see this option, gain 50, 75% very quickly.
Okay. All right. The phone call thesis for Jay Powell. Okay. Hey, the point about the phone call, that ain't math.
I hear the horses.
That ain't math, Alan.
They're coming.
Jay Powell cutting because his phone rings. There's no math there.
All right.
Appreciate it, Mr. Duckman. Always a pleasure. Alan trades some HPQ. Of course, we're watching the Fed, and the bond market sure as heck wants that cut. Let's talk some more about bonds and different ways.